tryna take it down, place for you just scoring minds, best of bar.
All right, ladies and gentlemen, I got your watch list coming into February 3rd, 2020, and the stock market is actually going to go crazy tomorrow. A lot of things can happen, but China has intervened in the market unlike any time since pretty much 2004. So I'm going to go over what happened. I'll even show the Bloomberg report. This is all in response to the coronavirus. The stock market in China has been closed this whole week as it's been escalating, and the U.S. markets have been dropping because of the Lunar New Year. But now it's set to reopen, and as of Friday, people were expecting a 12% drop when stocks open. But now, after these actions, people are expecting around 6 to 8%. But China is pretty much throwing the kitchen sink at this. So I want to go over that, talk about this, what this means for the U.S. markets, and then also discuss the plays to watch. So I have all the plays that we already made last week. Again, we've been riding the wave. Even with any of these puts, we've been making sure they covered earnings or we're at least getting time. So I want to go over those and then talk about some of the plays I made on Friday that I did right at close, which I'm still needing to build a position on. So those are going to be in play. And then also some other companies I'm going to be looking out for. So before we get into any of that, you need to make sure you guys are subscribed. Drop your thumbs up on the video. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description and it is pinned in the comments. We better see you there in the morning. It is free $99. It costs you nothing. All we ask is that you're positive and respectful, but you could watch all of this live. If we make any plays, anything happens, if it bounces, the Colt got you covered. So please, hopefully we see you there. Just be positive and respectful. And the most important thing you need to do, post your watch list below. Let us know what you're looking at. If you got any plays, earnings, follow-ups, put plays, bounce plays, post that all below. And now, don't forget, we made this account for you. We're doing random trades from the comment section. So post a specific play. Tomorrow, I'm going to go through a random comment generator and post it. We'll spend up to $100 on the play. This is real money. This is a real account. We made this play last week, PFE. We were up on it. We made like $10 and then it came down. So we're sitting here $4.15. We're at an $85 loss, but we're going to pick one. So post the play in the comments. And if it gets selected tomorrow, I'm going to make this trade live on this account. So we're getting to see. So far though, 0 for 1 on the first trade. But let us get into the good stuff. So I want to go over the keys for you tomorrow, but this is what is happening here with China. You see, here's the report. You got it on screen, but what they're going to be doing is supplying 1.2 trillion yuan to money markets on Monday, meaning a net 150 billion yuan injection. Then they're going to provide banks 300 billion in money for relending. Now, this is important. Actual net injections isn't as high as it's been, but combined with that 300 billion, this is the most they've done since 2004. But that 300 billion yuan in money for relending, that is literally the repos. China is taking a note straight out of our book, and they are using the repos to help add liquidity to their market. So this is why the expectations came down. And I will tell you the key date from this. They have certain restrictions. And again, the fact that China's doing stuff like this, anytime China makes actions you haven't seen with 20 years, there's usually reaction, but it also takes time for the markets to react. So it's creating a unique opportunity, which again, the timing is going to be very, very important. But they're also going to use open market operations and other tools to ensure sufficient liquidity, keep money market rates stable. They're going to temporarily remove the cap on Forex debt for some firms. They're going to be less strict in checking banks' required reserves at the end of January. Then the Banking and Regulatory Commission, they're lowering lending rates and fees for companies and regions most affected by the outbreak, suitably extend the grace period for firms that have difficulty meeting the end 2020 deadline to comply with new asset management rules. They're going to allow some insurers to raise their investments in equities from the current limit of 30% of assets. So again, they're allowing people to buy more, if anything. I haven't even got to the best part. They're going to maintain the pace of overall credit expansion and continue to lower borrowing costs across China, especially to manufacturers and to small and private firms. Encourage banks not to call in loans to firms affected by the virus, especially smaller ones, and consider rolling over the loans. And then now, here is the good stuff. They're going to temporarily halt night sessions for futures trading from February 3rd. They're going to allow some share pledge contracts to be extended as much as 6 months, allow listed companies to apply to delay reporting financial results for 2019 and first quarter of 2020. And then they're going to streamline corporate bond sales, including by allowing financial institutions to submit materials online. And then they're going to, the other one says raise financing quotas, but part of this, and what one of the thing is, they're going to limit selling and short selling. So they're halting futures. They're going to limit short selling, and anything above, I think, 10 million yuan, which isn't that much. It has to have, like, I think a 7 or 10 day approval. So that is the key day to watch. It's around February 10th. Some of these restrictions will die down, but then people will be able to either short or sell stocks, but they're banning that now. You see they're taking, again, they're throwing the kitchen sink at this and changing so much just to now stop the market from panicking too much, because like we've talked about, and this is kind of surprising me, I knew it could, if the virus got big, it could surprise any economy, but actions like this is showing that it is actually having a big effect in China, and they're taking all these measures, because if they didn't, it would be a run on everything as far as the investment. So watch China. That is going to be important. I'm expecting them to hold it up, but I think that as long as this fears keep going and the situation gets worse, by the time this first wave around February 10th, by the time they have to renew some of this stuff or add more, we are going to see what's happening. And then if China falls, you might see that contagion spread a little bit. So I'm going to keep my eyes open. Now, that's the next thing. As far as tomorrow, what are going to be the keys? Do I think it's going to go down tomorrow? I think it's possible, but there's going to be a few things I'm going to be looking for with China. So one, I will say right off the bat, earnings is not finished. So keep this in mind. This week is also going to be slow. Ironically, the week of February 10th, that's where you start getting 200-300 companies a day. This week is going to be kind of a lot like the last week's, but not as big of companies, but there is still some that we are interested in. But watch out for that. As far as what I'm expecting, given China, our markets, the contagion, I'm expecting, if anything, it's either going to be a gap down and then a run up to another level. So we might gap down and then run back up to where we closed here today, or it's going to be a slow pain trade like Friday, where it's kind of going to be opening at a certain level and then just slowly kind of come down here and do another 600, 700 points, but big. But it's really the biggest thing we have to see is how the market reacts to China, what happens with Europe and the United States, but mainly what happens to China in China. How do Chinese people react? What happens to their stock market? Depending on the scope of that with these actions, that's going to be important. But the fact they're throwing the kitchen sink at this, I think we're going to see a China trade here in the next 10 to 12 days for sure. So keep that in mind. But again, February 10th is when those Chinese measures will reflect the selling. Then you'll get to really see that if there is still panic, despite them putting all these roadblocks in, then you'll get to know how serious it is. And again, watch the Japanese yen. That is also another indicator to see how the Asian markets are doing and how they're viewing this, but the yen dropped below the Wuhan zone before the S&P, so keep that in mind. Then lastly now, watch transports and commodities. Those are going to be two industries. Those are the ones most affected with China and related to it, so I want to see that. A lot of people have been talking about copper. Again, you're going to see what's going to happen with gold and even oil, so keep your eye on those. And then now look for the value rotation, something kind of like McDonald's. Despite the big drop, some stocks didn't drop as much, some did, so keep that in mind and watch for the laggards and leaders and call them out. So this is what's going to be important. All of this is going to set up for a crazy day tomorrow, so I hope you're ready. I hope you're on stream. You need to be smart, balance the books, don't get too jumpy, get some time, make some profits too, and just make these trades free on the way down. We can ride the wave, baby. But let us get into the plays. So right off the bat, this is the play I made at close, and this is the one I want to build a position on simply because it has been getting killed. I did make another play on TLT, but I remember I've been calling it, and I said it's just so hard to get filled, but we need another one of these days where you see how it's going in ranges, holding up, dropping, holding up, then dropping. This is what I want, and this trade I made, it doesn't cover earnings. I bought the 1640 put and then sold the 1630. So I bought that one for $70, but now, surprisingly, that trade is only 2 standard deviations out the way. Now, their earnings is the week of February 28th for booking, but they're pricing in about $130, $140 move. So with the stock at 1830.55, this one falls in it. The thing is that, again, this play doesn't cover earnings, so I might want to get one that does. And with the spread so large, you might be being able to get $10, $20 closer for the same price. And then the fact is, it's dropped so much, the premium has increased a lot. But watch booking, that's going to be one. Then the TLTs, again, we added a set of the February 7th. We still have the February 17th, and those are up about 700%. TLT has an ex-dividend date, so watch the run-up coming into that. But again, the market bonds have been reacting more to some of this downside. If anything, we're still holding those UVXY plays. I'm still into the spreads. I like them here. The key is going to be, if you're not in UVXY, let it come down. Let on any of these days that we stop dropping hard. And again, you're seeing with China, the anticipation, the fear levels rising now. So it's going to be expensive. And again, this will be now, depending on if we close down tomorrow, that'll be 2 down Friday, down Mondays in a row. That will be important in saying something. But watch the UVXYs, watch the TLTs. I like those. As far as anything else now, watch Yang. This is a China play. This is like the Chinese ETF. UVXY ETF, so it's an inverse. China stocks go down, this goes up. This has large spreads, but the minute, again, any of these with any of the UVXY, TLT, the beautiful part is these things could gain a lot, but the minute they stop this crazy gapping up trajectory, the contracts will get cheap. And then as you see here, it shot up, then it drops down 3 days in a row. This kills the premium, then it shoots right back up. You could get a good play. The key is going to be, though, the timing of it. And again, all of these plays we could strike, believe it or not, very, very late. So I like those plays. I'll go over a few more. But again, what I also want to set up for this week, I'm going to be setting up for Google both ways. They have earnings, but now I want to get both ways if both contracts decline. This is the key I'm going to be looking for, is for we go down tomorrow. That'll naturally bring the calls down, but then there should be put premium in there because of earnings. So then we should see the puts not decline as much. So if I see that tomorrow, I'm going to start to get ready for Google earnings, which is I think either this week or next week. But watch out for them. I am going to finalize our snap position for earnings. I'm adding money to the long-term portfolio tomorrow. That's going to be giving me some wiggle room, but given the market, I don't know if I'll add more snap before earnings, but I want to see how that sets up. And then I'm also going to be watching the continuation on Amazon and Facebook. We rolled over on Facebook. We're still in those Amazon calls that from last week on the run-up. And I said this, do you hold the Amazon? If you have already hit some of these trades and you're already up and you have profit so far for earnings in the midst of this, you can afford to take the risk. You're playing with profit, you have profit. If you have only got the Amazon and you miss some of the other ones and you're still at break even or down, I would look to take the Amazons. That's me talking to myself. None of the recommendation, option trading, shilling risk. You can't lose all time with financial investment. Please, this whole financial advice, educational purpose only. But watch out for that. Then watch Apple and Microsoft. If there is a bigger sell-off, they're going to have unique continuations, and I'll show you some key factors there. And then lastly, Roku puts. I'm setting up for those on earnings. These were how they moved on Friday was crazy. Again, this was a big drop, but pretty much even down here, the puts were negative that we bought. And a few seconds later, they went up 80%. So those contracts are going to be very volatile. This is a big mover again in the growth sector, so I'm going to be watching out for there. But as far as everything else, again, keep that eye on booking. Watch Google. We're going to be watching Amazon. And then another good example here is McDonald's. We almost hit that credit spread play. I might do one on HD, or I might do another one on McDonald's this week. But in general, you'll notice they dropped almost 1% less than the market. They've been holding up, so they did have earnings, but watch out for the laggards and leaders and call them out. So watch out for those. Watch McDonald's, Roku. Again, Apple now, they went down 5%, Microsoft 1.6%, but the fact that Apple dropped so much, and again, Microsoft had earnings, these are your two biggest Dow companies and just companies in the market by market cap. So if there is a bigger sell-off, these have a lot of meat on the bone, especially Apple there. So those could get attractive and those could move a lot more unexpected. But again, watch the ones that drop a lot, because if there is a bounce, the ones that drop the most are going to bounce even if the market comes up. So keep that in mind. Then watching the video, the contracts are holding up. So even though they're dropping a lot, there's still earnings coming up in a few weeks. So the contracts are actually holding up on the call. So this one could be a good one to flip. Then watch XLNX. We're still in those plays. We have the February 7th and the February 14th that we rolled over to. We took a majority of the profit. Again, we cashed out over like $3,100 or something at this point. But then we still have about $300 in other puts. Then watch Uber. We're still in this play as well too. Again, I'm going to wait to see how the transports, again, consumer transports, they have earnings. I think Uber could be a good one too. The fact that they're kind of staying the same price, they're showing resilience, but the puts have gone up in value. Then UAL, they dropped more. Delta banned all flights to mainland China. This is going to take the next leg down. However, surprisingly, the UAL puts are only up like 8%. So we bought them expensive, even though it keeps coming down. These puts are relatively cheaper compared to anything else. That means the premium's been high and it's staying high. That's why when you buy puts at the bottom and you pay a lot, even though it starts going down, you don't make as much. That's why the key is to buy these as cheap as possible. So watch out for them. Then finally, watch out the Asian stocks, Baba and Baidu specifically. We're even up on these Baidus. We had that spread from a while ago. It's up 300%. It's only like $20, so it's only like $20 in like 100 or something. But watch out for them, and then watch out Baba. Remember, I made a YOLO play on them on Friday. Again, you could play either Baba or Baidu, or you could go for Yang. I might go for the individual companies, but watch out to see when these bounce. If you see a bounce in the Chinese stocks, that could be a play. And usually the China stocks gap down more in the morning. They react, and then they kind of do their own thing. So watch out for moves and watch out. If they do decide to bounce and rotate, and there is positivity in China, those could be great. And then finally, too, like I already said, I'll just reiterate it, TLT over UVXY, but UVXY is our secondary runner-up. But this is what I'm going to leave it off on. I forgot to even say this, but so if you made it this far, you got it. Wait for more bad news and wait for a bounce to happen where the situation keeps escalating. Again, I'm going to give it a 10 to 14 day window. If certain things play out, the news gets worse and the market has bouncing. It could drop a little low from here and then bounce before the next day leg down, with the news getting even that much worse, and it's obvious, and we see it reflected through commodities in other nations. I'm going to take one of those big, crazy, out-the-money plays like we already have, but then I'm going to use that as the opportunity to strike. So I'm not going to take them yet. I'm going to keep my eye out for it, but if this situation keeps playing out, and with what China did today, if I could confirm what I think it is, and I see it play out over this next 10 to 14 days, that is going to be our golden ticket, and it's screaming something at us. So I hope you guys are ready, but that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. Make sure you do not panic. Keep your head in the game, baby. You need to control the budget so you could get all these plays and get opportunities. It's better to be late than wrong. This is not the time to lose your head and go crazy and doubt yourself. All you got to do is just keep enough money to be in the game, baby. If you didn't get last week, this week's yours, baby. So let's go. And if you got last week, it's time for you to keep it and make more. Keep your eyes open. Don't force it. Let's avoid easy mistakes, baby. And I'm going to see you in the morning. Let's go.